U.S. job market slowdown. Are we running out of steam? The U.S. job market is facing a critical juncture, and the signs are not looking good. Despite a seemingly steady start to the year, there's a growing risk that the momentum is slowing down. The July jobs report, a highly anticipated release, is expected to reveal a concerning trend, a net gain of only 115,000 jobs, a significant drop from the previous month's 147,000. This slowdown is a cause for concern, especially when considering the broader context. The current pace of job creation, averaging around 130,000 per month from January to June, is the weakest since 2010, a time when the U.S. economy was still recovering from the Great Recession. This trend is particularly worrying, as it suggests that the job market is becoming increasingly reliant on a small portion of the economy to drive growth. Heather Long, chief economist for Navy Federal Credit Union, highlights this issue, stating, "We're becoming overly dependent on a few sectors to drive job growth, and that's a risky strategy." But here's where it gets controversial. The reasons for this slowdown are multifaceted and often interconnected. One major factor is the uncertainty surrounding tariffs and the ongoing trade war. Businesses, especially small ones, are hesitant to hire new workers due to the unpredictable nature of the economy and their operations. This uncertainty has led to a holding pattern, with companies waiting for more stable conditions before expanding their workforce. Elizabeth Renter, senior economist at NerdWallet, explains, "In an environment where predictive information changes weekly, it's no wonder businesses are hesitant to make long-term hiring decisions. This uncertainty, coupled with reticent workers who are discouraged about their job prospects, has resulted in a labor market with minimal turnover. Instead of the healthy churn needed for a robust economy, we're seeing a stagnant market." The latest federal data on labor turnover confirms this trend. The Job Openings and Labor Turnover Survey shows fewer job openings, hiring at a one-year low, and a quits rate below the 5-year average. And this is the part most people miss: the impact of immigration on the labor force. Foreign-born workers have accounted for a significant portion of labor force growth since 2020. And efforts to curtail unauthorized immigration are contributing to a shrinking labor force. This shift is having a profound impact on the unemployment rate, which is becoming less of an indicator of economic health and more of a complex mathematical problem. So, what industries are driving the gains? Healthcare, social assistance, and state and local government businesses, which make up less than 15% of overall employment, were responsible for a whopping 94% of job gains in June. This concentration of job growth in a few sectors is a cause for concern, as it suggests an imbalanced labor market. The Diffusion Index of Private Industries, which measures the breadth of job growth, stood at 49.6 in June. A measure below 50 indicates that more industries lost jobs than added them. While tariff-related price hikes are starting to impact inflation, the most significant effect on the labor market has been the uncertainty they've caused. This uncertainty, coupled with the post-pandemic normalization of workforces and the potential impact of AI, is dragging on the market. Wages have outpaced inflation, but the recent events have kept the Federal Reserve on the sidelines, leading to a return of the K-shaped economy, where the wealthy are driving growth, while the less fortunate struggle. Heather Long sums up the situation. People are feeling the strain. The labor market's weakness could exacerbate existing stressors, such as growing household debt. So, what's the way forward? Long hopes for tariff certainty by the end of summer and a rate cut by September, which she believes could stimulate hiring. The U.S. job market is at a crossroads, and the decisions made now could have a significant impact on the future of the economy. What do you think? Is the job market running out of steam, or is there still room for growth? Share your thoughts in the comments.